What's going on, everybody? It's your boy, Mr. Banks, coming at you live with another series of trade recaps of teaching you how to trade and make trading simple. This is how to trade part 13 in a series of how to trade. So, we'll be going over understanding confluences. As you guys know, hit another 215% trade on a day trade, as well as we are hitting these on weekly swing trades on the daily basis as well. Getting into it, we're going to be going understanding confluences. If you know what a confluence is, it's pretty much a series of indicators or indications showing, hey, we should take this high probability trade. If you guys don't already know, trading is about the highest probability. Right? There's no certainties in trading. It's about probability. So we use confluences or things that line up to show us, hey, this is probably going to be the highest probability trade. If you guys are new here, we go over another concept that I want you to understand. Those who have been watching my videos, congrats. I'm sure this is burned in your head, but the market is just made up of buyers and sellers. And I'll keep going over this in every single video until you understand. Trading is actually one of the most simplest things you could ever do or understand. Why is that? Every single candle you see on a chart, whether it is from a yearly chart down to a 1 minute chart, is made up of, you guessed it, two people. And those two people are buyers and sellers. So to understand the highest probability, right? Understand the highest probability, we just need to find where are the buyers, where are the sellers, and we can use something called confluences to understand this probability of if it's going to be the buyers or the sellers who are in control. So we ask ourselves one question every single time before we take a trade. Actually, two questions. Who is in control and who should be in control? So when we ask ourselves this, right, we ask ourselves these two questions. Who is in control? Who should be in control? We ask ourselves that because we need to figure out who is in control. Is it the buyers or is it the sellers? And then who should be in control? Is it the buyers or sellers? So who is in control? If the buyers are in control, where the buyers should be in control, then we look to the upside. If the sellers are in control, where the sellers should be in control, we look to the downside, right? That creates us and gives us our highest probability. If you guys are ever in doubt, you need to zoom out, right? So we're on the weekly chart here. Talked about this with my team on Sunday, said, hey, look at these weekly candles, right? They can give you a picture. And this kind of goes for any time frame. Anything I teach you, anything in trading, which nobody else will tell you, is relatable on every single time frame. If you are being taught a concept that only works on one time frame, you're not being taught a real concept, right? They're not teaching you a real concept because in trading, everything should be able to work out itself on either the lowest time frame to this highest time frame. There is nothing at trading that should be taught that says, hey, this only works on this time frame, right? It's a facade. That's a lie. They're lying to you. They don't know what they're doing. They don't know what they're talking about. You should be able to use what is being taught on any time frame. Obviously, the higher time frames, talking about the weekly chart, higher time frames, the monthly, the daily, show us a bigger move. So now that we know that we're on the higher time frame, we're on the weekly. On Sunday Watch, I said here, I said, hey guys, as long as we stay above and hold above this weekly close, right? So if you guys don't know, in a green candle, the open is the bottom of the body, the close is the top of the body. If we stay above, we retest, we hold above this close, that is bullish. And why is that bullish again? I know some of you already know the answer to this. Because the sellers are in control below this close, right? Sellers below the close are in control. And why is that? Buyers took us up to these highs. Sellers took us back down to that close, right? So that shows us that if we do break below that, the buyers, let's go ahead and clone this. We know that the buyers at least are in control, right? Going back to everything I just talked about, buyers are in control here at this close, right? They're in the control of this close. Why are the buyers in control here? Because they said, boom, took us up, and then sellers said, hey, we're going to take you back down, do. And then the buyers met the sellers here, right? Sellers took us down, meeting the buyers here at that close, right? Makes sense. The buyers are in control until that close. So if we know the buyers are in control at this weekly close, we know as long as we hold above this, that is our highest probability that we continue higher, right? Because we know if the buyers are in control, right, we go back to these two questions. If we know the buyers are in control here, who is in control? We know the buyer's in control. Who should be in control? The buyer should be in control above this weekly close, last week's close. Then the highest probability is we continue up. Whether it's a bounce trade, a retest, or a breakout, the highest probability is we at least get some movement back to the upside, right? Which we did on Monday, right? We pushed higher. Today, what happened? Well, let's go down, right? Look, weekly close here is about 744, called 744.50. Let's see. Let's go back weekly here. Let's see what that weekly close is exactly. About 745. You can see within pennies. Where did we bounce from today? Right. Obviously, we pushed a little bit lower at the end, but where did we bounce from? Right. We took this bounce trade here. Right. We had a sell in the morning. We had a double bottom. We took this bounce trade. Right. So we know that as long as we hold these lows, we are more than likely, the highest probability is that, right, we continue higher, or we at least get a decent sized bounce, right? Because we know that again, the buyers are in control at this level, right? So when we come back to the daily here, this is where, what are the confluences? What is one of the confluences? The daily 8 EMA. And you guys already know that the daily, right, we're on the daily chart here, the daily 8 EMA, or any 8 EMA on any time frame that you use, right, is our trend indicator. So we know as long as we hold above that 8, the highest probability is we stay bullish, right? We're above. The 8 has crossed the 21. We are continuing higher. What are we doing here from these lows? Higher highs, higher lows. What is that? That is a bull trend. We are still in a bull trend. We created a higher low here. So there is your confluence. Confluence was a retest into weekly close. Second confluence was daily 8 EMA. Third confluence was higher low retest. What is our fourth confluence? Well, if you zoomed out a little bit, we had a gap fill. Those are called confluences. Actually, we have a fifth one, and it is on the lower time frame, a double bottom. That is 5 things, right? We have 5 different things, confluences, that said the highest probability is we bounce. 5. That to me gives me enough ammo to say I am going to at least risking my money to get long. We'll go over that one more time. Market is controlled by 2 people, buyers and sellers. That is it. Nothing more, nothing less. That is literally all you need to pay attention to. We're on the weekly time frame. Weekly demand would be a retest into that weekly close. Why? because we know the buyers control this level. So if we hold this, we will at least get a bounce, right? Who is in control? Who should be in control? We look to do that. That is our first confluence. We go down to the daily time frame now. What trend are we in on the daily from these lows? We are in a bull trend, higher highs, higher lows, higher highs, higher lows. What did we do today? Put in a higher low. Where is this higher low? Well, we have a confluence right at that level of the weekly level, the daily AEMA. Great. Daily AEMA right where that weekly level is. Then we can go down to the lower time frames and say, hey, we have a gap fill. Wow, okay. We have a gap fill. And then obviously, this is obviously a big, you guys can see that we have a lot of balance here. It's obviously demand, weekly, daily demand. So we have that confluence, gap fill. What is another confluence we have? A double bottom. Why is this important? This double bottom is important. Let me get into this. The double bottom is important because it shows the sellers. So same concept here, guys. I want to prove that this is the only concept you need. Same concept here. Sellers try to take us down. So if the sellers are in control, coming into our demand test, retest, if they are going to stay in control, shouldn't they break and hold this and push lower? If they are truly in control into this demand and this demand would fail, what would happen here? The sellers would overtake it because the sellers would be in control. What happened? Buyers bought us up, double bottom, buyers held this level. So that goes back to exactly what I'm teaching you guys. Who is in control? Who should be in control? Yes, were the sellers in control here? Because I know I'm going to get a lot of questions. The sellers were in control. We were selling. Sellers were in control. But then we ask ourselves, who should be in control in this demand level? The buyers. Okay, once the sellers took us into this level, right, into this demand, who should be in control here? We know the buyers should be in control into this level. I just showed you on the weekly and the daily, right? AEMA, weekly level, zone. Who should be in control? The buyers. So then who became in control? The buyers then became in control. Great. So that gives us our 1 and 1. Who should be in control? The buyers. Great. Who is in control? Yet again, the buyers overtook the sellers here. Buyers are in control. Great. So now we have the buyers are in control and they should be in control. That gives us a high probability we bounce. You add into the extra confluences, right? This is just an extra ammo. Think about it as you have extra ammo into the trade to say this is the highest probability, right? You're stacking in these confluences that say, hey, I have literally 5 confluences here that say this is going to bounce. That's pretty good. That is, in my opinion, I think that's pretty good. It's 5 different things saying, hey, we are going to bounce here. Right? So when it comes to confluences, I'll end it on this, guys. Don't try to look for 5, 10. This isn't the point of the video. The point of the video is that when you do have these confluences like this add up, it gives you the highest probability because I can only imagine how many people try to get short here. Oh, I mean, I saw it on Twitter, social media. People try to get short here, right? So when you can see this very quickly that you have a lot of confluences that were going to bounce, that's going to help you not get offsides, right? It's going to help you not get offsides. So that's why we took the trade. If you guys are interested, we are the Wolves of Wealth. I trade in here daily with my team, hitting these daily for you guys. Hope you guys learned a lot. Talked about confluences. This is part 13 on the How to Trade series. If you want any more, please check out the YouTube, Wolves of Wealth. Leave it on this, guys. I believe in you. Believe in yourselves. You can do this. You are really the best trader you know. You just don't know it yet. Any questions, as always, drop them in the chat. I love you, and I'll see you next time.